Good afternoon or morning, everyone. This is Dan Hussey with LAWaveForecast.com bringing you our London session trading room recap. I want to begin by highlighting what went wrong this morning. We were looking for this into our early trading here, looking for the S&P 500 to trade into its gap fill today. We were buyers at the 1755s. We had a 3-point stop. We ended up getting stopped out, only for the market to now snap back and looks like it's rallying up and into the gap fill. Unfortunately, this is one of the conundrums with trading gaps, is sometimes it just isn't going to give you the entry that's most logical, and it is what it is. I still see the potential for the 55 support here if we come back down and test it. Now, moving down to a micro time frame, it'd be it would be tighter risk, only risking maybe 1.5 points. And again, for a move towards the 63 gap fill, which are very logically should happen. We are holding extension longs here, so it doesn't look like the 55s will even fill. If we do go to the gap fill, it looks like we'll just continue up from here. Today we opened with in negative ticks. We made a low tick of the day, then we continued through those lows, then we made a high tick of the day and continued through those highs. So we have both bullish and bearish divergence. I use the tick high and low as kind of a range, a barometer for the market, and ultimately the winner and still champion is always Bank. Bank has been leading the S&P higher all day, and it's just been really just on a tear. So it's hard to be a seller of stocks when Bank is rallying. And you can see overlaid with it is the S&P, as well as a little moving average I use as just kind of a gauge for to tell me relatively where Bank is. Next trade, next thing I want to highlight is taking a look at the Aussie yen. Without getting too into it, we are still holding and kind of rolling here. Rolling higher off of this 93.25 support level. So long as we remained above the 92.60s, I actually remained bullish on the Aussie yen for a swing towards the 96.80s. We could be getting the start of that now. The Aussie yen's often very slow to start and quick to finish. So when I say that, I'm literally referencing the time it takes and the structure it makes off of lows. I mean, this looks terribly corrective, but in a stretch, you can make this out to be a nested 1-2, 1-2. And today's price action alone, let's review the trade we took in the webinar, and we're actually still in half of. So we sold off in the Aussie yen, and I was actually somewhat expecting the long that was holding last night to continue holding support. And this was you had a nice little spike down on after Aussie news yesterday, and a spike rally, and we obviously continued lower and through and broke 61.8 lines. But upon breaking them, today we were unable to hold the short off of highs. This market rallied up straight through the short, and then immediately after breaking the short, it gave us a Globex ambush long, and that was the trade we took in this morning's webinar. So we were buyers at the 93.40s. We had to stop below at 93.20, just 20 pips risk. We took our upside first targets at the 93.62s on this push higher. And even inside this level now, it looks like we've broken 61.8 lines of the short, and the market is pulled into a little micro ambush long as well. So definitely looking like the Aussie yen wants to head higher and potentially onwards to the 93.90 targets. I might be a little aggressive on taking that off, as I never like when a target aligns with a prior high. It seldom will fill. It will. Usually, in my experience, what happens in situations like this, when I have a profit target that aligns with a prior high, the market will either rip through this level, and I will feel like a complete idiot for having taken the profit target because we would be 50, 60, 100 pips higher, or we never quite get there. It'll come up, it'll trade, it into resistance, prior resistance, and then fall off a cliff, and then I get taken out, break even. Nevertheless, I did trail stops up here to just below this low at a 93.35, so you know, when all is said and done, locking in some pips here on no matter what happens. So the rest of this trade is a nice little, will be a nice little bonus if it can get to the 93.90s. Personally, again, I'll be a little aggressive as we approach the 93, you know, 87 prior highs, and maybe even take this off anywhere between 90. I'd be happy with 93.80. Anywhere between there and the actual profit objective at 93.90, I think is a safe place to take it off. But two great little ambush setups, and what is looking like bulls taking over on these 5 and 15-minute time frames for the Aussie yen. And certainly trading that way. Yesterday, intraday signals coming down to a 15-minute chart. And yesterday in the room, we were able to highlight the 136.02 anchor to lows extension short. That did hold the 35.20 resistance level we talked about. I was a little patient here on both the Euro and the Aussie and on taking a short, which is good. But the setup we got, and we'll go through it here, there was a series of longs that took us up and into this resistance. When that series finally broke, you can see that break here shortly after the close and reopen about, well, 3 hours after. Immediately pulling now the ambush in the direction of the larger swing. We were able to get short the 135.10s. We took a plus 30 pip first target, the 134.80s. Got filled this morning right around the European Open. And we have profit objectives to the downside of the 34.10s, a bit of a front run of the technical target of this larger swing. So we are, you know, we traded a micro in the direction of a larger setup, and we're able to do so with minimal risk, smaller risk than you would have taken if you actually sold the 35.20s themselves. So this type of trading, this ambush style of trading, I utilize in order to position myself and be able to take less risk for much greater gain. Overnight, the 50% long off of yesterday's low got a reaction, subsequently failed, and upon failing here, the market has actually also pulled into an ambush short that has gotten a reaction now for the euro. It was front run by, this is an 84, front run by 3 pips, so that's we expect a 4 pip front run, so I wouldn't be surprised to see a second test of this level, but ultimately I'm seeing this 34.90 resistance level, and we have trailed our stops now to the entry point, so we're able to lock in the 30 pips on that euro dollar short, and now it's, you know, basically 34.10 or bust. Well, not bust. 34.10 or you know, taking what we already locked in off the table. Definitely seeing little micro long, also getting a reaction off lows, but that doesn't mean that this thing is going to go like a rocket ship here. We have an ambush short that's already traded, might get a second test. We know we're in larger 15-minute extension shorts, so this whole market could, you know, mess around a little bit, maybe retest 35, the 35 handle, and then come down. But if we do get taken out at 35.10, so be it. The euro, like many people have been talking about, seems to be getting towards the end of some kind of cycle, and we could see, you know, short covering rally begin on the euro because you know, this thing has come so far so fast. You know, everything retraces a little bit. Ultimately, for the longer time frame here, still looking for the euro to trade down into the 133, 128.80 area, or 129.80, excuse me, or 132.80 to 133 area. There we go. Could be, you know, a couple weeks off still, as the euro is probably going to rally up and then maybe sell back down, and, you know, looking for a nice three-wave structure down into 133s. So I'm holding back on the longer time frame swing trades for the euro, and right now I'm just concentrating on the 15-minute setups, the 15-minute trend, and trading it as such. You know, taking it every, you know, 40, 50, 60, 100 pips at a time, and not getting too involved in the larger time frame setups. Okay, not ignoring them altogether, but definitely not looking to position myself in them at this time. The British pound, we haven't touched this in a while. Looks like it's an extension longs. Going to see resistance, see how strong it is here at the 160.80. You know, like we talked about before, we came up off of prior support, and the pound really could be in some kind of larger triangle right now. This could be a failed C leg of a flat. So if that's the case, this probably hit up to 164 pretty quickly. But I see nothing worth trading outside of, you know, the little, on most markets right now, the little 15-minute trends. The only trade and the only market that I have personally positioned myself in, and that we are, you know, looking for slightly larger moves, is actually the dollar yen. The dollar yen is at this very interesting point in its cycle where it's about to prove to us, you know, one of two things. Basically, it's going to tell us which way it's going here shortly, you know, and it's going to be a almost 1,000 pip move, either higher or lower from these levels. So if you're able to get into a position, get free, and just let it ride. Obviously, don't over leverage yourself. Don't take on too big of a size. But this is a rare opportunity where you have a market that's daily ranges have condensed so much that there's only one way for this market to go. Well, there's two directions for this market to go, and when it finally does move, it's got, you know, 6 months of stops and orders to clear out. That's going to be quite a move when it finally does go. So I've been, you know, along actually this whole leg up, and I'm maintaining holding my longs until I see otherwise. I'm seeing, you know, we saw the 97.80 support hold. We're seeing the 97.30 support get a reaction today, and we actually have an interesting ambush set up, which we'll see if it trades. I have 98.50 and 98.40 short-term support now on the dollar yen, just like the Aussie yen. You know, we broke halfway back short for the day, and now the market could be pulling into you know, a support level to take us then, you know, higher into this afternoon. We'll see what happens though. This also could, you know, continue to head sideways a little bit before deciding to move as well. But if you're long, hold them if you got them. If you're short, be very careful. Make sure you can get free or reduce risk. I see the rationale for the short, but when I take into account, you know, some cross-market analysis with like the 10-year and certainly other U.S. dollar crosses, I find it very hard to believe that there's going to be some, you know, substantial dollar yen downside anytime soon. Anyway, overnight we were able to get long the 98.35s. Stops, I believe, on that trade have been trailed to break even now. We still were long from lower, well, that was a D trader. Either way, we're looking for, you know, a push towards 99.40, and then ultimately a push and a retest, hopefully above, but back towards 100 as well in the near term. So over probably, you know, by the end of this week, hopefully we can see that push up into the 99 figure, and I would hope actually far above, but we'll see what happens. We're long, we're free, and the rest is up to the market now. So for the rest of the day, look for 99.50 to 99.40 or 98.50, 98.40 support, and upside in the near term towards 98.70, and ultimately a push above the 99 figure. Okay, gold. Again, this is we talked about this, how we would kind of seeing gold now potentially making a mess of itself and bouncing between the 1320 and 1305, this $15 range. Definitely looks like what's occurring here. So if you're not already long the 1305s or short the 1320s, I think you missed it. I think we're going into a range-bound market here until gold just decides to move, and that's probably not going to happen without any kind of Fed or FOMC news. So we'll see what happens. Gold just has a tendency to wait for that kind of stuff, mess around, go sideways, and then just move $100 in 30 seconds. Not my type of market, but there's definitely extension shorts playing against the full halfway back long still, and this is pretty much exactly why I don't trade gold, because it will do this and then this. And that is not the type of market. I'm not a gambler. You know, you had a 50-50 shot down here of it going either way, and it just decides to go. And that type of move doesn't have liquidity. Your stops are going to have slippage. And with a contract like gold, or even worse, silver, with a tick value is extremely high compared to other assets, it's just not something I like to touch personally for trading. Doesn't mean the trend isn't there. Doesn't mean that we don't have the rationale for heading both higher or lower on multiple time frames. But like we've been talking about really for probably the last 4 months, gold is in a sideways market right now and hasn't made up its mind for its greater trend. And that's a reason to me to be on the sidelines. Okay. All right, well, the S&P is definitely heading a little higher here. Again, 1763 gap fill. Wish we could have capitalized on that trade, but you can't get them all. It is what it is. All right, Aussie US dollar. I think we'll close it up with this today. Kind of an interesting 15-minute chart. There's both a long and the 6-to-8 line of a short holding. It's kind of anyone's ball game now, and personally, I'm thinking the Aussie yen and the dollar yen are going to be more substantial movers than the Aussie US dollar. So the Aussie US dollar, seeing both sides get reactions here, means to me that maybe there's going to be a little bit more indecision in the Aussie, and this, you know, could be more of a yen dollar move going on. Definitely can make the case for full halfway back long trading at the 94.80s, but just again, it leads me back into my thoughts of, you know, this thing could go to 96 and then sell off all the way down to 93, or we could just continue lower from here down to 93 too. So I don't see much in the way of a great trade setup in the Aussie dollar. That's why we traded the Aussie yen and the euro dollar, because like I mentioned this morning in the room, you know, I looked to, and I'll bring this over, bring these over again. We look to these little gadgets. I got these little FX currency maps. The reason being is when I was asking myself yesterday, okay, do I want to sell the Aussie US dollar or the Euro US dollar? I immediately looked to these two currency maps, the dollar crosses and the yen crosses, because they tell me something about relative strength of all of our currencies. Okay? And what we were seeing is the Aussie, the pound, and the Kiwi are our three strongest currencies, while the euro is one of our weaker currencies. And so when I decided to position in my dollar long positions, I did so, you know, against the yen for the dollar and the euro. And then when I wanted to be in a risk-on position, I wanted to get long the Aussie yen. I mean, these looked pretty much identical yesterday, but that's, you know, the concept I'm talking about here is basically I sold the Euro US dollar rather than the Aussie US dollar because I was selling the strength, the short-term strength, in the one of the weakest markets. And hence the Euro US dollar short has been performing far better than the Aussie US dollar short, because the short at the same time, you know, you saw it go all the way through to a new high on the Aussie, whereas the euro has been more or less in a downtrend since that time period. So it's kind of why we utilize and look at relative strength and weakness between different markets, because we want to be positioning in the one that's going to give us the highest probability for a setup. All right, here goes the S&P. Just real quick here. Gap is about to fill. We're one tick from filling the gap. So we just kind of consider that a gap fill here. That's unfortunate, but that we missed out on that gap fill trade. But you know, it's that's what this is all about. It's, you know, 90%. It's trading is a game of execution, and you can have the right bias. You can have the right. You know, we knew we wanted to be in be in an S&P long today, towards this gap fill, for the gap fill. But execution is everything. Sometimes the execution isn't there. So, too bad. The Euro Aussie, Katie, is I see the need for the Euro Aussie now to rally into the 42.40 resistance. There is an extension short, so like multiple times. This is traded once, twice, 3 times. Here, let's clear out some of the other stuff on this chart so you can see this extension short. So, say maker new low would put the Euro Aussie up to a 42.40. However, we are seeing today, today's high to today's low, potential resistance right here at the 42. Basically right here at 142. So if it's going to go, I see 42.40 capping it, but honestly, there is resistance right here. So to me, this is the Euro Aussie rallying here would be the Aussie US dollar selling off to catch up with the euro, and then once 42.40 is hit, the euro would probably take the reins again and sell off down to its targets. But again, we can have both the euro and the Aussie US dollar falling, and the Euro Aussie will tell us which one's going faster. We are coming in on a major support level again down here at 141. So that's another reason that as the euro does sell off and continues to move lower, if we see the Euro Aussie move into the 141 figure with the Euro US dollar heading down into low 134s, it's another reason to be a little bit more aggressive on taking your target off, because the euro currency in general could have some major support, at least in the short term down here. So, all right, everybody, that concludes our London session recap. Hope everybody has a great rest of their trading day, and we'll be back with you tomorrow as price action develops.